many traders lose because they only look at one time frame. So today I'm going to show you how we can use multiple time frames, the daily, the weekly, the monthly, with the 4-hour, to make better trades, to trade a little bit better. For years, I realized, after years of trading, I actually realized that effectively you only need one trading setup. So for those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob, and it's still Coffee with Rob. Welcome to the live show. Hope you guys are all still well. I'm going to take my little picture. I'm going to move it up into the little corner there, into the middle, and because there is a stream here. I'm going to move it up into the little middle bit there so that it's out of the way of the charts, and we'll talk a little bit about how most traders don't look at multi-time frames, and including myself, actually. I do sometimes just tend to ignore it and not really bother with it when you actually should. You should actually use multiple time frames in your trading, because I'm going to show you how they help you a lot. I've been doing this for 34 years. It's a long time. So for those of you who don't know me, this comes from the heart. It comes from experience. I'm not saying to you that I'm a great trader, that I know everything or anything like that, but I will show you all the mistakes that I've made and all the mistakes that you're probably going to make in the future as well. And that's what I'm here for, and that's what we're all about. And the live shows, every single live show, a little bit of information on the markets and what we're on about. Don't forget, trading is risky. Most traders do lose money. And if you don't like losing money, you don't like risk, then you know the drill. You probably shouldn't be trading. Yep, totally. That's the whole point. Let me take this little picture and get it out of the way so that we can go and talk about the trading, and we can go and talk about the markets, because clearly the US markets have been in a bit of turmoil and a bit of confusion as to whether they're going up or whether they're going down. And clearly the S&P has done this little, I'll go up thing. And it was going all the way down yesterday, and people were beginning to panic. There's a pincer bottom now over here. Hasn't really gone far. It's come down to support, bounced, and gone straight back up again. So even though there's a whole bunch of geopolitics going on in the world, there's not a lot going wrong. The US dollar index is kind of still going up. Nothing wrong with that. Our United States Canadian dollar trade is just milling around, not doing much. My oil trade got taken out. It made a profit. It hit the profit level while I wasn't looking, took a full profit, actually a little bit more, and then it came back. What a luck. It actually did really well. Normally I follow the stop loss up behind it, and it normally comes back and takes a stop loss up. This time it just simply took the take profit when I wasn't looking, and that's just fine, because the take profit is the target in any case, so I'm not too concerned about that one. Then gold was the call of the day today for long. I do believe that gold will still continue on in its long trajectory here, because it is hitting the trend support, and it'll probably bounce and continue on up. And silver has been the surprise of the year, surprise of the day, surprise of everything. And that's actually broken through resistance, gone up, is now coming back, bouncing off that, and starting to go back up again. But today, we do want to talk about using multiple time frames to take a trade, or to decide on a trade, or to look at a trade. So if you were going to trade the S&P 500, and by the way, to all those people that are here, good afternoon. If you were going to trade the S&P 500 and you were looking at the S&P 500, you're thinking, well, this looks bullish, I think I'll take a trade. Think I'll just grab a trade on the S&P 500. One of the most important things that you can do, and I'm guilty of not doing this as well and not taking the time to do this, is just go up the time frames. This really works for day traders, traders who trade on 5-minute charts. And one of the reasons many day traders lose on the 5-minute and 1-minute charts is because they don't look at the direction of the instrument that they're trading on that particular day. Because if you were to look at the daily on the S&P 500 and see that it's bullish, you go to the daily, and if you were to see, well, it's actually a bullish day, We've got a green candle that's going up. The day before was a bit bearish, but today looks pretty bullish. Looks like it's going up. It's coming off the trend support. So now, if I was to go down to the 5-minute charts, I would say, since the daily is bullish, I'll only take long trades on that product today. So in other words, what I'll do is I'll put all my information in place on the 5-minute charts, whether it's support and resistance or a trend, or whether it's some other system that you use to trade, and only take long trades off there. So for me, I would only take a long trade off of this bounce, off of this demand area at 69.43 on a 5-minute chart, for example. But on the H4, I'm looking more like, well, I'm waiting for it to either break resistance, it's bouncing off the support, will it hit resistance and come down again, will it go through? So a good thing for me to do is to go look at the daily, and then I'll say, well, you know, look, if I look at the daily, there's a green candle, it's bouncing off support, looks pretty bullish. But don't stop at the daily. Why stop there? There's loads of further places to go. You know, you can go a little bit higher. Let's go to the weekly and see what's happening on the weekly. Now, the weekly gives you a slightly more complicated picture. And it's exactly what you were looking at on the H4. On the H4, you were thinking, maybe it should break resistance before I take the trade. Maybe I should see if it breaks down below the support before I take the trade. What does the weekly tell you? Yesterday, last week, we've got a bullish week. This week, we've got an undecided candle. And an undecided candle bouncing off the support between the resistance and the support tells me that all of that money is undecided. There's no decision as to which way this is going yet. So perhaps I should be a little bit cautious before jumping into the trade. So much information coming out of just going to look at the higher time frames. So the daily is telling me we are in a bullish mode. So specifically, if I'm in a shorter time frame, might be worthwhile looking at that. The weekly is telling me we're very undecided. So, you know, maybe, maybe not, perhaps not. The monthly, on the other hand, is telling me that we're extremely bullish. We're clean bullish. We've had all these bullish months and we've hit resistance. So once again, bit of indecision here on the resistance level. Sort of, is it going to break out and break through and continue on from here? Or is this the end of the road? Are we sort of hitting a wall and saying, come down again? So now that you've got all that information, you can say to yourself, well, I've got all that information now. I've looked at the higher time frames. And by the way, guys, this doesn't take as long as it's taken me to tell you about it now, 10 minutes or 5 minutes or whatever it takes to tell you about it. This is, you know, once you've been trading for a long time, this is seconds in your head. You just look at it and, oh, that's how it works. And you just simply take the trade from there. It's as easy as that. You don't have to sit and think about it. You can just look at it and say, oh, it's bullish. Oh, it's undecided. Oh, our decision made. I'll wait until it breaks that level. Let's go and have a look at the gold trade, for example. Let's see what the gold is telling us. Right, so we've chosen that gold will go long if it bounces off the support. We're on the H4. Let's confirm that trade. Let's go up to the H1 or the day. Ooh, the day is showing a little bit bearish. Yesterday was bullish, but today showing a little bit bearish. Could be going a little bit to the downside. Maybe we should be a little bit more careful before we jump into the trade. So what I would do is say, well, I'll wait for it to hit that and then take the trade up. Overall, it's very bullish on the day chart. So it's a bullish trade. Let's go to the weekly chart and have a look at the weekly chart. What is the weekly chart telling us? Weekly chart telling us it's very bullish, 100% bullish. It's broken through what was its resistance and it's breaking out to the upside. You could wait for it to come back and retest before taking the trade. But I mean, that looks pretty bullish to me on the weekly chart. Doesn't look too bad at all. And then you can go to the monthly chart and you can have a look at the monthly chart and, well, that's gold. Look at gold on the monthly chart. This is just bullish, 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 all the way up. So what it's actually telling you is if you're going to take any kind of trade on gold right now, your odds on if you take a bullish trade. if you can find a good bullish trade. In other words, don't go looking for the bearish trades, go looking for the bullish trades, because the bullish trades are actually looking quite decent at the moment. And that'll give you your direction for the 4-hour chart. So you're trading on the 4-hour chart. Do I want to actually take a short on this? Well, no, not really, because absolutely everything is telling me that this is actually a bullish chart. Everything's telling me that it's bullish. And if I was trading on the 5-minute charts, I'd only be looking for bullish trades on the 5-minute charts. If I was trading on the 1-minute charts, I'd only be looking for bullish trades on the 1-minute charts, simply because everything up high at the top is bullish. So I'd go for all the bullish trades. That would be it. That would be my thing. Now, fellow traders, let's have a look at, for example, a Forex condition. Because one thing I've been told about Forex condition is the Forex is cyclical. Okay, I was going to use another big word, which is not going to come out of my mouth so well. So we'll just say Forex is cyclical. In other words, it goes up and down. So somebody mentioned to me that if you trade Forex, you don't need a stop loss. Now, as I said to you, after years in the market, 34 years, I realized that you only need one setup, but you also need a strategy and a business plan, and you need to stick to that strategy and that business plan. You see, the thing is, you cannot time the markets, so we have a strategy and a business plan. Now, this particular person's business plan is, well, I don't have a stop loss. The Forex is always cyclical, so the price will always turn around and come back, so I will only take profits, and it doesn't matter which way it goes because I don't know which way it's going to go, but eventually it's going to turn around and come back in my favor. Now, I get that. I totally get that, and I get the principle, and I get the concept of that, because our concept is to take the same risk on every single trade and to make more money on your wins than you're losing on your losses. The idea that Forex, for example, is cyclical and will always turn around and come back, I do like that idea. I do understand that idea. But here's the issue. It can stay in one direction far longer than you can remain liquid in the markets on leveraged trading. If it's one-to-one or spot trading, yeah, you can take that kind of risk. You can say, well, I'll buy it now, and whatever happens in 6 months' time, so be it. It's a bit like long-term trading, okay? But what you've got to understand is, for example, you could say, this has hit 141, for example, and you could say, well, I'm going to go long on that, and it goes short, and it goes all the way down here to 136. What if it never gets back up to 141 in the next 2 years, and you just sit in this trade for the next 2 years? Firstly, it's going to cost you in daily costs, daily trading costs, swaps, all these different things are going to cost you money. So you're going to be paying for that. You're going to be paying for the money that you've borrowed against this, because it's a funded, it's leveraged trading. So you're paying on the funding effectively every single day. And then also that money's tied up in that trade. So you can't trade anything else because the money's tied up in that trade while you're waiting for it to swing around and come back to that level. So while I agree with many traders that yes, there's a strong possibility that this is going to swing around and it's going to come back to that level eventually, and it's going to give you that money back eventually. If it doesn't, your money's tied up and it's stuck in there for a very long time. A good example of that was the euro US dollar when it was way up in the 130s, and now it's been in the 116s, 115s for maybe 2 years, 3 years. I don't know. It's been there a long time. So be very careful of getting caught up in that trick, because that trick can leave you behind, and it can leave you with a lot of damage. Now, what I love is, for example, like let's look at this US dollar Canadian dollar. This US dollar Canadian dollar is our trade. We are in this. Our stop loss is moved up into profit, and we are looking, we do have a take profit target, just like I had on oil. And of course, the oil one, it went up, shot, took it out, oof, off she goes. Well, that's great. it's great. I should be really happy about that. But I'm the type of person who's, I could have made more. I could have pushed the take profit up. Well, actually, it's actually started correcting now anyway. So it's a luck that one's actually working out. Now this one, we look at the US dollar, Canadian dollar. This is the daily. The daily is bullish. It's going up. It's coffee with Rob. So there we go. It's going up. Nothing wrong with that. So if you look at the daily event, everything's bullish. So we remain bullish on the US dollar, Canadian dollar. We can go and check on the weekly. What's the weekly doing? What's the weekly doing? Well, if you look at the weekly, that also appears to be remaining bullish. It's showing me that everything's to the upside. That doesn't mean, ladies and gentlemen, that it cannot turn around and go the other way. Because remember, as I always tell you, and I go over this over and over again, the markets are 50-50. Every single time you take a trade, there's always the possibility you could lose, and there's always the possibility that you could win. When you click that button, it could go either way. Doesn't matter what system you got, doesn't matter what edge you got, it can go either way. So it doesn't mean because you're looking at the higher time frames here and we're seeing that it's definitely bullish, that it's definitely going to stay that way for you. It just means odds on it's probably going to go in that direction, because odds on the bigger time frames, it's telling you it's long. So when you go to the shorter time frames, probably should be long as well. Okay, that's what we're looking at. We're looking at the odds. The odds are in our favor. That's what we're looking at. But guarantees, there are no guarantees in trading. There are never any guarantees in trading. That's not how it works. Here's the monthly chart. So you go all the way up to the monthly chart, and there you go. Big green candle for the month. So US dollar, Canadian dollar is looking very bullish this month. Last month it wasn't. But your concern on the monthly is if you draw a trend line in here, it's kind of hitting the trend resistance. So you're a little bit concerned about that on the monthly. But if we go down and we look at the weekly, also coming up, but it's very close to my take profit, so that's fine. You come back to the daily, similar scenario, but you've got much more room to the upside. Come down to the H4. And basically, if you look at the higher time frames, you can clearly see that where the take profit target is, it should reach that. That's what you use the time frames for. The time frames basically give you direction in your trading. They tell you which way the trade is possibly going to go. There's no guarantees in trading. There's no way that you can predict the market. Win rates do not make you money, as I've told you a million times. It's all about the strategy that you use to make more on your wins and lose less on your profits, because that's where the money is at the end of the day. And as long as you have a few wins here and there, things will go in your favor. That's about as simple as it gets. Now, I'll take questions and I'll say hello to everyone. Yeah, that is trading with time frames. So, hello investors at Hate Diet Pepsi. There are Black Swan Forex events as well. Yes. Hi everyone, and for 1986. Hello there. Good to see you. I'm glad you're all here. I'm glad you're all on board. So, I don't know how many of you have taken long trades on the NASDAQ and you got surprised and it went short, but it could still carry on going short because the NASDAQ has hit resistance here. Look at that. Look how many times it's hit this resistance level and come down. This is a very, very, very strong resistance level. And if we use our little time frame analogy, there's the NASDAQ going bullish. Let's have a look at the weekly. What's the weekly telling us? The weekly's telling us, oops, there's a bit of a red candle there. No, it's an undecided candle. It's just totally undecided, as we saw now on the S&P 500, SPY, ES, whatever you want to call it. It's undecided. It's not really a bearish candle. It's a spinning top. It's just not sure which way it wants to go, but it has hit the resistance, which is quite tricky. And using our time frame analogy, if you go to the monthly, you can see that while it is bullish, it has also hit that resistance, and the one before it was also quite undecided. Now, there's a lot going on in the world. There's an insane amount of things going on in the world at the moment. So if you want to be taking these trades, you want to be careful what you're doing. Lex says, good evening there. Welcome to the show. Lovely to see you guys. It's fantastic to have everybody on board again. I love doing these live shows. In fact, these days I actually look forward to them. You know, when I first started doing live shows, I used to think, do I really want to do that? You know, can I do that? Will I be able to speak to an audience and whatnot? And really nowadays, I look forward to having you guys on the show and chatting to you on the chat. It's really great. Do yourself a favor, ask the questions, whatever you like, and I'll show you how you do it. Just remember that nothing that I say here constitutes financial advice. Everything that I say on these shows or in my videos or wherever I say it is based on my experience, based on what's happened in my life, based on how I've traded for the last 34 years and how it's gone for me. And what I try to do is put forward to you what has worked for me and what hasn't worked for me. Particularly what hasn't worked for me is important for you guys to know, and where I've gone wrong and all the mistakes that I've made. But funnily enough, all the mistakes that I've made, I know every other trader has made as well. I can ask just about any trader, have you done this before? And almost guaranteed, even if they've only been in the market for 2 years, they've probably made that mistake. It's quite insane, really, how we always make the same mistakes. Incredible when you think about it. Look at the UK 100. This is the FTSE. You know, using our analogy of the time periods, everything is absolutely bullish. You can't see that one because it's hiding behind the price. Doesn't really matter. But yeah, very bullish. The UK 100 has just gone up and up and up and up. You know, I was asking the question the other day because a lot of people were telling me that the UK is in terrible trouble and everyone's, you know, it looks like, I don't want to use swear words, so it looks really bad. Somebody told me it looks really bad, not going great there, everyone upset, unhappy, and so on. But then I look at their stock market, I look at the UK 100 and it just keeps on going up. It just doesn't stop. It's incredible, really, absolutely incredible. You might say the same about the Aussie in South Africa and the ZAR. I mean, this is an insane one for me. And I'm actually long on this at the moment. And once again, it's coming short. It really boggles the mind as to how this rand is managing to hold on, even though the US dollar index has turned around and started picking up again. Where's the rand strength coming from? Where's the all share strength coming from? Well, the businesses are doing relatively well. Yet 50% of the country is unemployed, but the businesses are doing well. They're making money. They're being profitable. The businesses are growing. If I look at businesses around me and I look at retailers and things like that, they're not doing badly. They're doing okay. They're growing. They're making money. So it's a really difficult thing to explain and to understand as to why some of these things happen. The US as well. You know, look at this. It just keeps on being bullish. It's incredible, really. The oil trade, that was an interesting one. You know, how it went straight up. And while I wasn't looking, was I sleeping or was I watching television? I don't know. I wasn't watching charts, that's for sure. And I got the message, you've made the profit. And I was like, okay, that's great. But could have got more. But then this morning I had a look and I was like, look at that. Glad I actually got the profit now. It's actually quite good. Turned around and came straight back off that target, came straight back down. So that's always a nice one, you know, when you get something like that. I actually feel better about life sometimes. This is the Nikkei. It just keeps on going up. Look how bullish the Nikkei is. Insane, really, when you think about it. Because I would have thought it would have come back and taken some of this money. But nah, it just keeps on going up. Lovely stuff, man. When NASDAQ March futures gets above 25,900, I'm going to start shorting. Let's have a look at that. NASDAQ above 25,000. Where did I put this thing? So many blooming charts on here now. 25,900. So somewhere around there. I get that, but the only thing I would worry about at that level is you've got this. Yeah, okay, there is a level on the left here. Interesting one. So yeah, that might be of some interest here. This shoulder on the left. I think if it breaks above the 26.3, it's gone. It's going to go up. And at 25.9, if it breaks above that, you see, this is a very, very, very strong resistance. At a very strong level, you can draw a block here and here and say, well, there we go. Strong. It's a strong resistance. And in all likelihood, it's going to keep coming down off of this. But I'm very concerned if it decides to suddenly just break through and break to the upside and go. It could do that. But with the politics in the world at the moment, you're looking at it and thinking, surely not. Surely not. But these things can fool you sometimes. And, I keep looking at these things and thinking, how can they just keep on going up like this? There's so much strife in the world, so much going on. So many talks of wars and all the rest of it, but these things just keep on going and they don't stop. There's your US dollar, Japanese yen, coming back for a bit of a relax here, coming back to take this money, come back to take this money and maybe bounce to the upside and go on its merry way. If you look at the daily, a little bit bearish. Look at the weekly, totally positive. Look at the monthly, it'll be a major positive. So, the US dollar, Japanese yen has been insanely bullish. And a bit like you said now with the NASDAQ, this as well, I got to say, this is going to go short. This is going to go down. It's going to run out of steam because I know the Japanese government doesn't like it up here. So I've said that a few times. That's probably going to come back down again. So it's always a scenario of what we're calling, like, for example, South Korean market went up like 90% last year. And all of these markets have been so bullish. And generally, there's an end to that. At some stage, there's a correction. There's always going to be that correction because markets need those corrections. Those corrections come. They don't go up in straight lines. There's always a bit of a downturn somewhere down the line. The difficult part is, as traders, can we call it? Can we call the point where it's going to correct? I heard someone say the other day, and I had, you couldn't stop me laughing for 2 weeks, actually. I just kept on laughing because I couldn't believe what I was actually hearing. The person turned around and said, but it's really easy to turn $5,000 into $100,000 in the market. Because all you've got to do is buy when the market crashes to the lows and take your $5,000 and invest it in the market at that point, and then it will grow to $100,000. I couldn't stop laughing. I really couldn't. I've been doing this for 34 years, and I myself have never, ever been able to call the bottom of a crash, the bottom of a market, and have the guts and the strength to say, well, the market's fallen to that point now, I'm going to take everything I own and throw it at the market now. I don't know anyone who can do that. I don't know anyone who can call it. Just the same as you can't call the top, you can't call the bottom. Nobody can. It's pie in the sky, guys. It's pie in the sky. What you can do is use our systems and our strategies and our lines and our price action to say, well, it's hit this level now, it's crossing back up, it's going that way, it's probably going to go long now, it's probably turning, the market's turning around again, perhaps I should have a punt at this. Would I throw my whole house at it? Probably not. I'll throw a punt at it. I'll take a portion of my portfolio and throw it at that trade and say it's starting to turn around now. There's a good likelihood that it might come down, but is it going to come? Look at this. You see, like here, it's hit this level here and it's at 26,000. You're thinking, ooh, look at that big red line. Would you throw everything at a short here? And then it comes down to this level and it goes back up again. I mean, and the same goes for the bottom. It hits the bottom and maybe it goes down 50%. And you think, well, It can't go any further, can it? How's it going to go any further? So you throw the kitchen sink at it, and poof, it carries on going down, and it takes all your money. So yeah, I couldn't stop laughing at that dude when he said, it's easy. You just take all your money, that whole $5,000 that you got, just throw it at the market when it's at the bottom. When it's at the bottom. Yeah. You know, you actually need a lot of liquidity to do that. You need to be quite flush, because if you do decide that you want to pick the bottom of a market or the top of a market, make sure you've got a lot of liquidity. Make sure you've got a lot of cash, because you're going to be sitting waiting for it to happen. It's a bit like the VIX trade, for example. All right. You take the VIX trade. Okay. I don't throw the kitchen sink at it. I take a trade on it. I take a trade and I say, well, at 15, I've got to buy the VIX, because at some point it's going to spike like these and it's going to make me some money. I can't afford to throw the kitchen sink at it, because if I did that, right, it's going to cost me a fortune holding the trade in the first place. And if it does carry on going into a loss, I'm going to have to hold that loss, and I'm going to have to be able to control it. So I don't throw the kitchen sink at it. I throw a large trade at it. That's all I do. You know, these guys are saying, just call the bottom of the market. It's incredible what I've heard in my time. I've heard some interesting things in my time. I've got to say, I've heard some seriously interesting chirps in my time. And one of them being just call the bottom, you know, or call the top. You see, it's exactly what perhaps he said, no, better off taking all your money on the crash and buy the VIX. If you can buy the VIX, buy the VIX. I always buy it at 15. I always buy it at 15. And then I like it if it drops to about 12 like that, or 13, because then I actually add to the trade. This is the one time where I advocate building in the trade. Every other time, stop loss, that's it, okay? But not with a VIX. With a VIX, I got this thing, because I know the VIX never goes below 10. When I say never, never say never, but you know, that's to be almost the perfect scenario for it not to, and for it to do so. I mean, so for me, it's never going to get there. And all I do is every time it's at 14 or 15, buy. And if it comes down a little bit, buy some more. And I keep building the trade if I can. But take a position, leave the position in, and leave it as long as possible, because eventually it's going to spike and it's going to give you your money. It's one of the best trades ever. But at least that you can trade with confidence, and you know where you are. It's the VIX, you know where you are. But I mean, the NASDAQ, the S&P 500, you can't call the bottom. You can only trade what you see. And I would, for example, like, let's say the NASDAQ does get to the levels that perhaps you mentioned now, 25 now. Let's say it gets here. I mean, the way I would trade it is I would wait for it to break back down again. I'd wait for it to go through the trend support, the whole 9 yards, the whole story, show me a bearish signal, red candle, and then I'll take a trade. But I'll only take a trade the same size as all of my other trades, because I'll manage the risk and I'll manage the trade. This is not one, I'm not going to take my entire, let's say it's $5,000 like that guy said, and put it in the market and hope to turn it into $100,000 because it's now reached a level. I don't know if that's the top. I don't know if it's going to come down. I don't know if it's going to go further. Nobody knows. That's the point. So you take the trade according to the feeling on the trade, and you take a normal trade. You just take a normal trade where you risk the $1,000, and that's it. You've taken your risk, you've put it in, you've still got 12 other trades, and off you go. So that's what the reason I was laughing at that, guys, is like, take all your money, because what somebody asked was like, you know, they've only got $5,000, they want to turn it into a fortune. Oh no, this is as easy as it gets. This is what you do. You just wait for the market to get to the bottom, and then you just like throw all the money at it, and then it'll make you all that money. Oh yeah, amazing stuff, absolutely amazing. I closed something now. Okay. Terrible. Terrible, 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 terrible. Okay. That was one of those things. Yeah. Guess I'll have to put that back at some stage. Whatever it was, we'll figure it out. Don't worry about it. And I'll be looking for it just now, and then I'll know what it was. Okay. There's the NASDAQ. And it's in a bit of a range at the moment, if I think about it. It's just kind of sitting in that range. The US dollar index is the interesting one, though, for me at the moment. With it coming back up, just sort of growing back up to this level. I'm wondering if it'll break back through the 100, though. It'll be quite interesting to see if it goes back through the 100. There is a good possibility of a sell-off on the NASDAQ right now, S&P 500, Dow, and all the other indexes because of all the geopolitics going on in the world at the moment. So, yeah, I wouldn't be surprised. And if you look at the amount of times that it's hit this level, just show on the day the H4 because it's easier. But look at this resistance every single time, just whacks it and comes down, whacks it and comes down. What you've got to be careful of, though, is, like I said to you a million times, is you chip on a wall, eventually you break through it. So there's a good chance somewhere down the line it's going to break through, but I doubt it's going to be this weekend. If you can get a short, I will sit on a short over a weekend rather than a long. Because a long's not going to take you far if it goes astray, you know what I mean, if it goes bad. But a short, I mean, you could wake up on Monday morning with a huge profit. I mean, it really is a short, because that's where the big falls come in. The long trades, I don't like to sit in over the weekend on the indexes because things can go wrong. But things can't go so right if you're short that you come back on Monday morning and your account's gone. But they can go so wrong. So, if you can get a short, take a gamble on it on the NASDAQ at 25.9 for the weekend, it's great because you never know what Monday morning is going to bring. And if Monday morning comes along and this thing is dumped, wow, you are in the pounds. I mean, that's one way to turn your $5,000 into $100,000. Yeah. But Morgan Oak says, how about US dollars ZAR? I think it's an interesting daily support. I'm long on the US dollar ZAR. As usual, getting destroyed by it, but that's life. I have my stop loss down here, way below the support. My opinion on the US dollar ZAR, it's driving me insane, to be fair, because I do believe that the US dollar ZAR should be going the other way. The ZAR should be weakening. I know the US dollar did weaken, but it's now starting to strengthen again. The index is growing strong. So where is the ZAR strength coming from? That's the question. It doesn't make a lot of sense. And there's so many political problems in South Africa and so many things going wrong, so many people starving, so much unemployment. But this rand seems to be trying to strengthen somehow or another. So it is questionable what's going on here and what's happening here. And yeah, we'll have to try and figure this out. But big support, big strong support here, massive support. So yeah, I'm hoping it'll bounce off that support and go back up again. But like I say, I actually did take the long trade, and even in the breakout here, and I thought, it looks good, nice long trade. Actually came back, retested, stayed long. I thought, okay, this is going to work. But now, I mean, you can't, like I said, every single trade you take is 50-50. You never know. You got a chance it going to go up, going to go down. There's no guarantees. But, the odds on, and the odds were on that it was going to go up, and yeah, it's coming back again. But there is still odds on that it'll bounce off the support and go to the upside. It's an interesting trade. It is a really interesting trade, but, what can I say? I'm on the wrong side of this trade at the moment. Yeah, you got to wait for the green candle, Morgan, before it goes up. I'm already in. Unfortunately, I took the trade up there. So I've lost this portion already because I was quite confident of it there already. I did take note of one thing that you guys might all see as well, and that there is a slight head and shoulders developed here. And that always concerns me because it is there. So we'll see. We'll see if that plays out or what it does. If the S&P, NASDAQ, and all those decide to do a little bit of a crash or a little bit of a correction, and the US dollar tends to go the other way, then this might just bounce and go straight back up again. So I'm not too concerned about it right now. I've left the stop loss down here. It's all fine. It'll be invalid if it gets down there. And there is some room to maneuver here. And that's why we trade on the 4-hour charts in the first place, because we leave ourselves all of this room to trade within. So if there's any movement, it might still come back and give you that swing. You know, we've got enough leverage to stay in the trade at these levels, and that's what we plan. That's our plan with our trading. So that's quite good. We want to look at the Euro Aussie dollar. So I'll tell you what I'm going to do for the Euro Aussie dollar is I'm just going to Euro Aussie dollar. What I'm going to do, I'm just going to add a chart in here. Euro Aussie dollar. If you want to look at that, there's a reason I'm not trading the Euro Aussie dollar on a regular basis, and it's because I don't live in that region. And that makes a difference to your trading, because things happen when you're sleeping, and that's why I tend to leave it alone, so to speak. Let's just get the Euro Aussie dollar up on the H4. So there's your Euro Aussie dollar. Looks pretty bearish to me. And if we do what our whole subject line was today, have a look at the higher time frames, just out of interest. You get the daily, you get the weekly, and you get the monthly, and everything is bearish. Absolutely everything is bearish. Everything is telling you that it wants to go down. So the Euro Aussie dollar is very bearish. Now, what you've got here is this big bearish run to the downside here. Then you've got this sort of range, this sort of pennant flag pattern going along to the side here. This will, in all likelihood, in all probability, resolve to the downside, because that's what they usually do. When they go up, they go along, they go up. They come down, they go along, they carry on going down. So they're normally continuation patterns. So there's a good chance that this will continue on to the downside. So that is a strong possibility on that. Let's just make it a little bit more unrealistic here. And I just want to see what we've got in the way of support resistance. So you've got a little level here, small little level here, which you're looking at. Boom. If I look at it, probably on the chart at the moment, probably there. Could probably draw one down this way as well, but I'm not going to. I just want to see what we've got on it right now. So short trade, basically, when it drops below that line, which is at, if I look at it, 1.736, somewhere down there. Short trade there, most likely. Yeah. So if you were to take the short here, yeah, something like that. Stop loss there. Probably looking at a short like that. It's a good risk to reward. Definitely a short trade. Okay. Just for info. There you go. Euro, US dollar. Okay. If anybody else has got anything, you're welcome to ask. I don't mind. It's all good. We can have a look at the trade, see what it's about. Gosh, my coffee's getting cold already. Must be the coolness in this room. Deep Sea, Billy, how are you? Been a while. My first two challenges, now I've got to try and get paid. Thanks for the help. Well, I hope you get paid. I do hope you get paid. Well done on passing your first 2 challenges. Congratulations. That's absolutely fair. I always love it when I hear how people have done well, particularly, hopefully, using our systems. That's always good to hear as well. But an absolute pleasure. I'm glad you're doing well. But stick around for the shows. It's good fun, you know. It helps you stay ahead of the game. And, you know, even after 34 years, to be fair, I still learn things. I still find things out. I still, you know, my mind still changes and moves with the markets. You've got to understand that the market isn't stagnant. It moves, it changes, it evolves, okay? And you've got to evolve with it. You know, I noticed once or twice when I've walked away from the markets for a short while and busy with something else, you come back and things have changed. They've kind of evolved. They're still the same, but they've kind of evolved just a little bit. So you got to be careful of that. So stay with it. Stay with it. Stay with the program. Keep on watching, you know, stick around. Talk to other traders. Always be in the group, in the loop as such, and listen to what everybody's talking about and what's happening in the world and where we're going and what have you. And I'm so glad to hear you passed your challenges. That's great. Absolutely marvelous. Good to hear that. This is BTC. BTC, I was actually waiting. I probably should have taken the breakout trade here, but I didn't because I'm not a big fan of crypto. But I was actually waiting for it to correct down to these lower levels here, and it didn't. It just broke to the upside. And I noticed over the last few months that Bitcoin was kind of following the S&P 500, and now it's changed its mind and done its own thing. So, but it has sort of given this sort of loopy effect, and it's broken to the upside. So it looks like it wants to go up now. So all of those of you that are invested in crypto and making loads of money, well, good luck. I'm not going to bother with it right now. If it retests, I might have a look at it. I was really hoping we would get a nice level on it. Then I would look at it. A bit like that guy said, just take your kitchen sink and throw it at it when it crashes completely, you know, that sort of scenario. But it wasn't going to crash completely, but it was going to go to a decent level, which would have been reasonable for a trade. But as we said earlier, if you can trade the VIX and you want to make lots of money, always just buy it at 15 and wait for it to spike through 30 and take some profit. Hey, Blue Mango, good to see you. Normally first on the show. Today a bit late, but that's okay. It's always good. It's always good to have you on board. That's important. Wonder where Sir Lunchalot is. I haven't seen him on the show for a while. Maybe he thinks we're at 2 o'clock. I don't know. Okay. Like I say, this UK 100 has really, really surprised me. It's actually worth the long trade. It's just bullish. It just keeps on going up. The only problem with this, if the American markets take a hit and they start to come down, these indexes are going to follow and they're going to come down with it. I think most indexes on the weekend, closer to the weekend, are definitely worth the short punt if you get the chance to. You know, if this, like you say, if this closes below the 25.8 and it hits the 25.9 resistance point, it's worth the punt for a short. It really just is. And if something geopolitical happens over the weekend, you wake up and you've got loads of money in your bank. If it doesn't, you're going to lose a couple of bucks, you know, but you're not going to go bankrupt, that's for sure. When I say I don't hold trades over the weekend, that's generally just long trades on the indexes and things like that. Be careful on the short side, though, on things like Forex and commodities and that, because they can go either way. It really doesn't matter depending on the politics. So, but the indexes, that's different. We've done the gold. Gold is long today. Gold is most certainly long today. Today's actually, this is trade of the day today, actually. I actually put it on the trade of the day where I was looking at gold and saying, well, if it comes down here and catches the support and gives a green candle up, it's long, but it's just going long as we stand at the moment. It's actually a pretty good long trade. What we're looking at is long from these levels, stop loss down here for the take profit somewhere up there at 5,000, if I can reach here with this chart, somewhere at the top there. I believe people are going to try and push it to 5,000 now. It's a round number. So they're probably going to try and push it up to 5,000. Who's to say? And if you use today's lesson, which is look at the higher time frames, the one thing you've got to look at here on the daily, you've got an undecided. On the weekly, you've got a definite positive. It's a bullish. If you've got a monthly, you've got bullish, 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 bullish all the way up. Look, it's a lamp pole formation. Do be careful of lamp pole formations. This is a lamp pole formation, and that means it's gone almost in a straight line. It's gone straight up. And what do lamp poles do when they're not secured? They fall over, okay? So do be careful of lamp pole formations, because when they fall over, if this falls over, the distance to down here is insane. It'll come all the way back, right? This is on a monthly chart. It'll come all the way back, quite far. So be careful of those lamp pole formations. That's something that might occur if we have a crash or something like that. But at the moment, it is very bullish. It's bullish here on the weekly. Look, it's still going up very strong. On the daily, undecided candle. People are not quite sure which way it's going. And on the H4, still bullish. It's resolving to the upside. So gold and silver, just insanely bullish. But silver, when it comes to that lamp pole formation, massive, massive lamp pole formation. Yeah. Well, when you say it looks like gold has no bear market, yeah, at the moment, for the last, I don't know, is it 2 years? I always get lost in time, but I would say at least 2 years, gold hasn't really been bearish, has it? It's been bullish, 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 bullish all the way through. It's been insanely bullish. But that's why I say it. This lamp pole formation worries me, because that, yeah, it is 2 years. Look at that, 2024, 2025. So there you go. It's just straight up. And that is incredibly dangerous. You know, it hasn't moved up carefully or with like up and downs. It's just gone straight. Nothing goes up in a straight line. And the mere fact that this has, and probably might even go all the way to 5,000, it worries me to be invested in gold. Because I think at the slightest sign of a big crash or some kind of war in the world or something like that, where the markets take a knock, I think the markets will take the 30-40% knock. I think gold will go past the 50%, maybe a 60% knock because of that lamp pole formation. So you can expect gold to take a really heavy hit if something happens because of that. At the moment, it'll probably go to the 5,000. I mean, that's for sure. If we look at silver, okay, silver's the same scenario. Here it looks fine because it's on the H4, but if you go to the monthly and you go and start looking at the monthly on silver, isn't that a little bit scary? Okay, over here it's been fine, and then here in 2025 there's been this swing, but tell me that's not a lamp pole formation. That is a formation from 30,000 to 90,000. Now I've seen this before. This is not my first rodeo. And I can tell you right now that that will come straight back down. If you don't believe me, and if you think, nah, Rob's talking through a hole in his head, what's he mad? Is he insane? Well, there's a possibility of that, but we won't talk about that today because that's not the subject matter. But if you go to the VIX and you have a look at the VIX, okay, just to give you the perspective so you can see it for yourself. Look at that move there. Okay, we're on the day here. Look at that move there, that spike straight up, and what happens straight after the spike comes straight back down. What the VIX does is it kind of magnifies that for you and shows you what actually happens. H4. Okay, there it goes straight up, lamp pole formation, falls straight back down to that level. So what you're actually seeing on products like silver and gold is effectively on the higher time frame, on the monthly time frame. You're seeing that lamp pole formation. What you haven't seen is the next leg. And the next leg is in all likelihood going to go boof all the way down to the bottom here, and it's going to hit the bottom. So, ladies and gentlemen, do be careful of that. It is insanely tricky. Look, on that front though, the silver has broken through the resistance, come up, back, retested, and is going long. It's still going long. If you want to be in it, just as long as you're not the last person who's in it. So, Rob, do you ever look at the CRT report? No, I don't. Yeah, silver future margin outrageous. Welcome to Trade of the Day. Welcome to Trade of the Day. Thank you. I'm glad to see you here. Welcome to Trade of the Day. Every day we put out a Trade of the Day members video for everyone so they can see what I'm trading and see if it works for them. It's absolutely fantastic. There's lots of other stuff there in the area as well, and you will get lots of other things going on. Elaine, good to see you again. Lovely to see you on board again. Elaine's one of our older, long-standing live show followers. Let's say been around for a while, and it's lovely that you're still here. I love it. Yeah, I don't. Tell us all about the report, Blue Mango. What do you get out of it? Silver future margins. I sold out most of my silver positions. The bigs are going to crash this thing soon. Craig, hi, new here. Found your channel last night. Welcome, Craig. Good to have you on board. We love having a chat here. We love, if you don't like waffling, then you're not going to enjoy the show because I waffle a lot. But yeah, that's all good. We talk about trading and we get together. And you know, the nice thing about it is what we find as a crowd, as a group, as a bunch of traders is it's a lonely game. You know, it's a very lonely place to be when you're trading. So it's nice to have someone else to offload on, to chat to, and it helps if you have these chats and what have you. So make sure that you've joined the Telegram channel as well. The Telegram channel is completely free. There's a link in the description below. Go and join the Telegram channel. Get on there, and we speak to each other there as well. You can chat to each other and whatnot. There's a few people on the group there. That too, that's also fun. Okay, it still shows institutional trading is buying gold crazy. You know, the institutional traders are buying gold because the old adage is, how can I put this so that everybody gets it? But in the old days, we used to say that gold was your safe haven trade. If you traded gold, it was a safe haven. It was a safe place to put your money if the indexes were in trouble or there was geopolitics in the world or things going on. But over the years, we kind of noticed that as well, when the world goes pear-shaped, gold goes pear-shaped with it. But I think the mentality is still there, particularly among the younger traders who haven't seen it, that if the world's looking a bit iffy, if things are looking a bit tricky, and people are not quite sure what's going to happen in the markets, people are not quite sure where the markets are going to go, then the institutional money tends to buy gold, and they buy a lot of gold because it's a place to put the money. So what you probably find is happening at the moment in gold and silver is, you know, the institutional money, it's not money out of their pocket. It's not their money. It's pension funds and investors' money and that sort of thing. And the rule behind pension funds, people's money, investors' money, that sort of thing is you can't have cash lying on the table, or you can't have, most of these companies are not more than 5% cash. In some cases, not more than 1% cash can be on the table. So in other words, at least 95% of all the cash that you got on from these funds into investments and whatnot has to be invested. Now, you're looking at a market that's top heavy. You're looking at a market that's saying, you know, we've kind of hit the top and we're a little bit like expensive right now. So yeah, there's the S&P 500. just invest all your clients' money in there. And you, as an institutional trader, are thinking, yeah, this is not going to hold. Okay. So what they do is they say, okay, you know what? I'm not comfortable putting all my money in there. So I'm going to put a whole portion of it into the gold, safe haven, the commodities. They take the money and they move it over to that side because they're not sure that this one's going to hold. So what that story tells you, if you are reading those reports and you're looking at that, what that story tells you is there's a good chance that Diet Pepsi is going to get his way pretty soon, and this is going to go short. Okay. So there's a good chance that we're going to get some kind of negative reaction, some kind of pop in the market, some kind of change. Because if they're doing that, then possibly everyone is doing that. Why is my VIX gone kind of strange here? It's a bit weird. All right. Maybe I need an updated product or something. I'll have a look at that. Okay. I must check that out because I'm actually in that trade. Hello. Don't do that to me. Okay. I'm looking for a huge pullback in gold. Most countries maintain gold reserves as part of their national reserves. Now, what you got to understand about gold, in the old days, the whole currency was, in most countries, were attached to the value of the gold. Somewhere back in the 70s, the US detached from gold reserves. They detached. The US dollar's floating. In other words, it's not based on gold reserves anymore. But it was. It was heavily based on gold reserves. And those gold reserves were what was basing the country's value in a very big way. So do be careful of how you value the dollar, the rands, and all those types of things on gold, because effectively the dollar at the moment is based on the USA's, for example, entire economy, and most currencies are, but it used to be pegged to gold, and it's not anymore. People are not even sure if the gold is in the Reserve Bank, but yeah, they've detached currencies from gold. It used to be, an almost assured thing. If you've got that much gold, you've got that much currency. It's kind of strong. Not anymore. I know for a fact the US dollar is floating. So that was announced back in the old days. So as much gold as they've got, the gold does add to the asset value of the country. If they have actually got it, that does add to the asset value of the country, as does everything else. So if you have, it works on how much the companies have got, how much money they owe, how much money they don't owe, so on. But it becomes complicated when we're at that point in the world at the moment where you don't know where the money's coming from next. It's just falling out of the sky. You see, what you've got to look at from the economical side of the world is back in the 1950s, 1960s, and I'm not that old, but I'm, just saying, back in the 1950s and 60s, a man could go to work and own a house, 2 cars, and have 8 children. And his wife didn't have to go to work at all. She could sit at home and relax and bake cookies, and they had a lacquer amount of money. They could survive. They actually did really, really well. And then sometime later on into the 60s and 70s, the wife had to go to work to help support that situation of having 2 cars, and now they couldn't have 8 children, maybe 4, because who's going to look after them? The wife's gone to work. So now they were having 3 and 4 children and maybe 2 cars and household. Both parents had to go and work, mother and father, both working now suddenly to try and support this level. But then as we went on into the 80s, it became a situation of, well, we couldn't have 2 cars anymore. We'd like to, but, well, we will, but it's going to be tight. We might need a bit of a smaller house. And I tell you what, to sustain our income, to try and make us stay ahead, we'll get a credit card. So credit cards came along and debt came along. and they started giving everybody credit cards and debt. And as time went on, more and more and more debt accumulated for these families. Their house sizes shrunk. They were more and more in debt, and they could hardly survive with what they've got. Now we've reached a point of inflection. We've reached a point of, we get to a point now of what's next? Where are you going to get the money from for these people to survive normal lives? These people are human beings are no longer even having 4 children. They're now having 1 or 2 or none because it's expensive to have children now. You need healthcare, all these different kinds of things which nobody can afford anymore. This is how the world has moved, and this is where the world has gone. And this rant all came from the gold, by the way. What you mentioned on the gold, rather interesting, because gold doesn't make the world go round as much as you think it does. And there's a lot of question around whether the gold actually is in the reserves as it should be. Okay. Does Iran's currency have a chance to recover in price? Every currency in the world has a chance to recover in price. Every single one. Okay, the ZAR is a good example of that. Oh my, this really shouldn't be recovering, but guess what? It is. Look, it's all dependent on the country's asset value, right? So if your country is falling to pieces and the buildings are falling down or being bombed, or people are ripping it apart, or there's no business, or there's no infrastructure, then the value of your currency is going to basically tumble out of the water, okay? Like what happened in Zimbabwe when they kicked all the farmers out and kicked everybody out of the country and started becoming a dictatorship. Effectively, what they did was they took all their money with them. The stupidity of it all is interesting. Here's the stupidity of it all. This is probably one of the most interesting things is, in Zimbabwe, they took everyone's farms, okay? They said, no, we're going to take all the farms, and you guys can all get lost, and we'll take over the farms, and you guys go back overseas and get out of our country, and then the country's economy collapsed. Why did the country's economy collapse? Because they stole the farms? Is it because they couldn't farm? No, the stupidity of it all is, think for yourself. How many farmers and people who own properties actually own them outright? Most of them, 90% of them, have a loan with the bank, have loaned the money from the bank. And the banks have loaned the money from the Reserve Bank. And the Reserve Bank of your country has loaned the money from the World Bank, so on and so on. So these people are so stupid, they're actually stealing from themselves. In other words, we lent you the money, now we're just going to steal that, and oh, damn, it's not paid for. Oops. Okay, ridiculous, isn't it? That's why they collapse. So now, this is the whole, I just went off on the sidetrack there about money, but, when it comes down to it, you've got to think about these things. And for example, now, you mentioned Iran's currency, for example, there's a lot of different scenarios of currency and that sort of thing. But if Iran, for example, as an example, gets back on its feet, and it has a good economy, and it has business, and it has trade, and so on in the world, then yes, of course, the currency will immediately recover, just like the Zimbabwean dollar is recovering in Africa as a result of slowly getting back on their feet. What a lot of these countries tend to do as well is they tend to end up kind of using the US dollar as a backup to trade with. But the future of currency is not in the value of your currency against the dollar and whatnot. I do believe in the future, what they're going to do is probably have a one world digital currency. That's what they're working towards. And then everybody will be under control and everybody will be watching it. It won't be Bitcoin. It won't be the crypto as you know it. This currency will be owned by the governments of the world somehow. Either that or they'll keep them separate, but they will all be digital, that's for sure. That's where the world is going with that. And that's what they're moving towards. And if you guys don't have enough capital to trade, don't forget we've got the funded accounts in the description below. And I've negotiated with EIGHTCAP. If you need a funded challenge or a day challenge or anything like that, if you use code RobsLogical, you get 20% off all the challenges. You get 20% off everything you grab there. So if you see that in the description, go and grab your discount and grab that as well. If you want a funded account, that's actually quite cool of them to do that, to give you the 20% off. So if you need something like that, go for it, grab it, enjoy it. It's nice. I set an alert for NQM26 just over 25 in it, just in case I'm sleeping. Well, that happens to me a lot, actually. I'm actually often, I just leave things in the background, and I don't even bother with the alerts sometimes. And yeah, sometimes I'm just sleeping. Insanely enough, yeah. So whatever. And then the trade gets taken out, and then I wake up in the morning and I'm like, oh, what happened there? Oh, okay, I made a profit or I made a loss, whatever the case. So here's the DAX. The DAX is going on the up, and it's just kind of bouncing off that support there. So interestingly enough, looks like it wants to bounce and shoot on to the upside. So that's quite interesting as well. Yeah, looking good. Looking good, man. Looking good. I don't know if we're gonna get huge pullbacks in gold just yet, though. You know, the thing is with the geopolitics in the world is the crazy thing about it is people tend to buy into gold when things are looking a bit iffy in the world, thinking that it's going to be a safe place for them to put their money. So for the time being, I think gold will hold. But those lamp pole formations are concerning for me for the future. Not right now. Maybe February, March, maybe March, somewhere around there. Maybe we'll get something. What's happening right now at the moment doesn't bode a lot or give me a lot of confidence in the indexes. So I'm thinking maybe the indexes will start to do their thing. Oil is doing something very interesting here. Let's just... I can't get the bloody thing out the way now. Can get this one out the way though. Let's take it to the day chart. Maybe I can get it out the way there. I wonder if my internet is slowing down. So I'm getting a bit of... There we go. Or is it my computer? Well, yesterday it updated again. I'll tell you what, that is so annoying when they update. Okay, let's go back to the H4. Just want to see, I'm looking at this as a level where it might go back and take some money. See that? Might come and grab that money and go down. So Brent crude oil might not be going straight to the moon. It might actually be catching this level and coming down again. That's great. I'm not going to trade it again just yet. Where I'll take Brent crude oil again is if it breaks to the upside over there. But for the time being, I'm quite done with it. It's broken to the downside, it's broken structure, and it's on its way down. Uh-oh. That's not good. Okay, don't do that again. Right. Yep, technology is starting to give me a little bit of a headache here, but it's okay, it's working. It hasn't fallen apart just yet. It might try to do it soon, but for the time being, it's all still working and all still going strong. Right. Okay, so there's a level there that it might just grab and then come down again. So I'm not going to get into Brent crude oil just at the moment. It has broken structure, has gone down that way. So I think what we'll do is we'll just put that line down there. After me showing you on Tuesday, you can trade with one line. I show you a chart with 400 lines in it, don't I? But I just put it there so I can see if it breaks to the upside again. Breaks to the upside again, I might actually take the trade. Who knows? We'll see. I'll see what it does. Okay. Very interested to see why that is showing as closed. Just go here. Control M. It's going to go down to the bottom. Dum, 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 dum. Oh, yeah, looks like it's closed. Go. Alrighty. Check it out a bit later. Cool. So, any questions? What you guys telling me? What can you guys tell me today? Where are we going? US dollar, Canadian dollar really does need to go up here. Go and take some money. Go and give me a profit. Get on. I'm going to move on. Look, trading can be boring, but it's not always boring. It's actually an exciting thing to do if you think about it. You can go and do your trading and enjoy yourself. So just don't get yourself caught up in going down to the 5-minute time frames and because you're bored and then ending up losing all your pension, all your money and all the rest of it. You know, if you just do it right, you'll be okay. You'll make the money and life will be good. But if you start doing this, oh, I think I'll go down to the 5-minute time frame because it's more exciting. Look, all the prices are moving around. Look at that. Look at that. I can take that and trade that. We'll make money down to there. Just remember the amount that it's moving here is so minuscule. It'll take you out very quickly. You get these long candles like that. So don't try trading that unless you really know what you're doing. Maybe you should have traded for about 5 years before you start trading on 1-minute and 5-minute charts. And even then, you're probably going to lose money. You know, when I've tried it, I've been very fortunate to either make a profit or break even, but it's not that easy, guys. It's not that easy. Rob, if indices drop, where will the money go to? Okay, so let me try and explain this the easiest way possible. If you take, for example, the S&P 500, right? The S&P 500 is made up of the top 500 companies in the USA, and that includes NASDAQ, it includes Dow, there's in there, their companies, and so on, okay? So if you invest in a share, right, in a company, and it devalues, then the money gets sucked up by the company. Other investors who sell get the money out. So it's very much a question of people invest into a company, right? And they put all that money in there. And when they make a profit, they take all that money out. If they take all that money back out, their little profit, then they leave a hole behind. But what you have to understand is the little bit of profit that they made might be yours. It might be your money that they've taken because you made a loss. Because for them to make a profit, you need to make a loss, or the company has to grow exponentially and make lots and lots of money. Somebody has to make that money for them, right? But now, when you are trading directly with those companies or in the index or whatever the case, that scenario, the indexes are made up by other companies, all right? So those investment companies make up this index that you can trade in on those companies. So this is just another company that you're trading with, right? So when this goes down, if you win, somebody else has to lose. If you lose, somebody else has to win. Effectively, what's happening here is you've got traders trading against traders, right? Somebody's winning, somebody's losing. That's how the market works. I'm trying to explain it in the simplest possible terms, okay? It's not a black hole. It's not a magic fairy. It's other human beings, okay? Other human beings take their hard-earned earnings, put them into the market, and then other human beings come in and take their hard-earned earnings and put them into the market. And it's a bit like making bets, right? So they say, I want this, I believe that this is going to make me a profit over this period of time. And then when it goes down, they lose money. The person who bet on it going down is the one who's going to make the money. Or the person who sold their shares and made a profit is the one who's going to make the money. So in other words, the money doesn't just disappear. Where the dregs go, the bits that fall off the side, Those are the fees and whatnot that the brokers earn, and the people in the know, and the Dow Jones, and everybody gets paid for every trade that takes place. They make money from that kind of scenario. They make money from the dregs, the money on the sides, the movements up and down, that sort of thing. They take their money from that. Okay, so I hope that kind of explains it a little bit, or gives you a little bit of an answer. But yeah, the money doesn't go anywhere. It goes into people's pockets. It goes into other traders' pockets, so on and so on. If you invest in a company, then you're an investor. And if you sell out of that company, you are no longer an investor, but you're taking either a profit or a loss out of that company and leaving somebody else to do the job. Right. So, people don't realize that when the indices drop, let's say there's a crash. Let's say this index goes crashing down and keeps on falling and falling and falling. Let's say it becomes an absolute disaster and it falls all the way down to this level here. It's not like a big hole, and it's not like a magic fairy. That money is other traders selling out of this product. Selling. And the more they sell, the less value this product's got, because it's got no value. The money's leaving the product. So it's becoming less valuable and it's falling down. People are selling out, and that price is being determined by the lesser and lesser and lesser amount of money that's in that product. Okay. Once you kind of stop seeing the market as lines, once you kind of stop seeing the market as charts, and you understand that there's other traders, other humans, large portions of money in the market, then you understand where that money is going. And your sole job in the market, as I always tell you guys, your sole job in the market is look for liquidity. Look for the areas where the price bounces off, because that's where the institutions are trading it and moving it back and forward, up and down, left and right. If you find those areas, those are the areas you're looking for. Those are the areas you want to trade off. For example, with support and resistance, you could simply, if you wanted to, if you were just simplify it completely and say, well, I'm not going to even wait for any confirmations. I'm not going to wait for any stories. I'm just going to trade it. You could simply look for a level like support or a level like resistance where it always bounces off, and say, well, when it gets to that level, I'm just going to buy. And when it gets to that level, I'm just going to sell. Because every time the institutions sell it off there is going to be that one time that you do it where it's going to go against you. And then you accept that and you take the stop loss and you walk away and say, well, that time they changed the game. But 9 times out of 10, most of the time, every time it gets there, it does that. So let me just do that. You could just trade that way. That'd be perfectly fair. There'd be nothing wrong with that as well. So yeah, interesting. That was a good question, Blue Mango. Fantastic question. Love the question. And it's an interesting topic as well. Where does the money go? How does it work? And a lot of people don't know. A lot of people don't realize that the money's just going to another trader. For example, if you lost, I might have won, and I'll get the money. In between, there's a whole bunch of costs that get divvied out among the brokers and Dow Jones, etc., and what have you. But in general, the main bulk of it, someone won and someone lost. And that's the sad thing about the market, is for you to win, someone has to lose. It's a fact of life. But an interesting fact of life. So in the beginning of the video, I actually did show you guys how we trade on timeframes, and I thought it would be an interesting topic today. If you guys have a topic that you would be interested in, let me know. But I hope that topic was quite interesting for you guys and you enjoyed it. And what I normally do is try and put a video together around that topic as well, which will go out, and it's more education for you guys and more information for you guys as well. That's just about things that have happened in the market. And there's so much in trading that you can learn, and so much in trading that you can find out over time. It's insane. Like I say, even after 34 years of trading, I still learn things. I still figure things out. I still find things out. And things are still quite interesting to say the least. You know, so the markets seem to be trying to recover after a interesting little, how can I put it, little spat yesterday where the markets went down a little bit. I see they're trying so hard to go back up again. But will they stay up? No, in all likelihood not. Now, the other thing is, guys, you know, Fridays. Should you be buying on a Friday? Now, I put a trade of the day out every single day, including Friday. Unless, of course, I can find absolutely nothing in the market, which is very, 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 very seldom. But if you did trade on a Friday, is it a good idea to be trading in on a Friday? And I always say it depends what you're trading. If you're going long on an index, do it with caution, extreme caution on a Friday, because Friday, you're going to want to trade out on a long trade on an index, unless you're sure that it's a calm, collected weekend where nothing is going wrong, then you might want to take that trade. But if it's not, you might be thinking, is it a good idea or not? Because you know, you get into a trade, it goes against you. You don't really want to sell it in a loss, and then you sit in it over the weekend. You come back on Monday morning and it's wiped out your account. So do be careful of that. But if you want to go short on an index, there's nothing wrong with that. You can take that chance, because that you might wake up on a Monday and you'll be in bonus, in profit. So look for the short trades on a Friday if you can. On the indexes, if you're going to sit in them. On the Forex, it doesn't matter which way or the other. You just got to be careful of how that Forex will be affected if something happens over the weekend. But what I always say is, on a weekend, look at what's going on in the world. I'm not worried about news such as non-farm payrolls, jobs figures, CPI, and that type of stuff. Not interested in the slightest. I could care less what the CPI is and all the rest of it. Doesn't matter to me. What matters to me is what big things are happening in the world. What's going on between China and America and Russia, and what's going on with the geopolitics and that sort of thing. What's going on with banks? Are they going to be bankrupt? Are they going to not be bankrupt? Is there a country that's failing? You know, all these types of things. That type of news is important, okay? So if you're going into a weekend like this one, where there's a lot of things going on geopolitically, where there's a lot of problems going on in the world, where there's a lot of disconnect between countries, a lot of threats being thrown around, be very cautious about how you trade into this weekend, because you don't know what's coming. What I have noticed over the years is when there's a crash coming on a Friday, you will normally start to see it before the close of day. You'll start to see the crash coming, get out, don't think it's going to get back on Monday or get better on Monday. Probably won't. So keep your eyes open for weekends that are not comfortable for the world. When you go into it, there's a lot of weekends that you go into where you just know there's nothing going wrong, like especially through December and Christmas and all those times, and through the year and whatnot, holiday times and things where just nothing's happening and everything's peaceful and everyone's happy. Those types of scenarios, you can trade into a weekend and pretty confidently come back on Monday morning without an issue. You can normally feel when things aren't comfortable in the world, when things are a little bit iffy. Those Fridays, do be careful. Be careful what you trade into. Be careful what you're holding over that weekend, and be careful how big you're holding and what kind of leverage you're holding on that weekend as well. I do like this US dollar, Japanese yen. I'm waiting for my short opportunity. If it breaks through here, I'm going to be taking that short opportunity because it's very, very overbought. Very, very strong. US dollar ZAR, surely this is going to bounce to the upside. Let's hope that it's going to bounce to the upside sometime soon. That will, of course, be extremely helpful. So as I said at the beginning of this video, I showed you how these timestamps can help you to determine your trading direction. And if I look at the monthly on the ZAR, I should most definitely not be long. I should be short, but that's my mistake. That's my issue. If I look at the NASDAQ, it definitely looks long. But that could, like I say, it could always turn against you and go the other way. You never know. You just never know with these things. But I do hope that that's helped you guys in some way. And on that note, I think I'm going to be actually heading on my way and moving along. And I want to thank you guys for all being here. I hope you've all enjoyed the live show. I hope it's been insanely useful to you. Tomorrow's video that I'm bringing out for you guys is all about if you can trade with $10,000. And that is the main video, the training video for tomorrow. So do enjoy that. Hope it'll be fine. I'll see the members in the morning for a wonderful trade of the day. And otherwise, I'll see you guys all back here for a lovely, fantastic, wonderful live show on Tuesday at 1100 GMT plus 2. That'll be fantastic. On that note, thanks for watching, and I hope to see you again next week. Have a wonderful weekend.